Welcome to Subramani. Whether you like it or no, the success of a blog or of a video channel, a vlog, is judged by the number of subscribers we have, right? So, not that it matters too much whether how many subscribers I have, because I don't get money for doing any post. But I would love you to subscribe and share it with people, because that's the only advertising for me is when you as a viewer go and tell other people about it and share it. I don't have a marketing budget, marketing team, I don't even have a big editorial team, right? So what to do, everything I do, I decide on my own and I give it to you. If you think this is worth it, please share it among your friends, colleagues, relatives, etc. Now that I have done my sales pitch, let me tell you some of the things that I have learned while investing. One of them is to say it is easy to be bullish in a bull market and being a bear in a bear market. Being a contrarian requires a lot of effort. For example, everybody thinks now the markets are poised for greater heights, etc. and the market cannot go down. The market is at 66,000 for the Sensex, so it will go to 1 lakh in the next 2 years, 3 years, whatever. Nobody can see any risk. So that time when nobody can see any risk is the time when risk is high and risk is lurking, risk is hiding like a tiger behind the bush. So there is risk, but we can't see it. So don't get into the feeling that there is no risk. I think there is high risk. So it is easy to be bullish now. You have to get the bear view in a bull market is not going to be very easy. So what can go wrong is a question which you have to be asking every day. I've even done a video saying only the paranoid survive, which is of course a book written by an English author. He was the CEO of I think of a telecom company, when he said only the paranoid survive. It is true, you have to be paranoid, and that takes a toll on your real life also, because you are pessimistic about everything. You don't judge and you don't believe anything unless you get 2-3 people saying the same thing, right? It takes a long time to convince me that something like this is really happened or happening, right? You have to see the evidence, you have to see the footage to believe that something like this is happening, and that is what is the reason for it. That's a completely different thing, right? So when things go as per your plan, it is easy to continue the stand which you are taking. When things don't go according to your plan, to stop, view and take corrective action is not easy, because there is a conflict between let the profits run for a long time, this is a temporary thing, to saying oh my god, there is a problem in this business, there is a problem with this promoter, there is something happening, so let me take corrective action. One is that. So another thing which of course these are all things which I'm not the first person saying it, there are many people who have said it. So being fearful when others are greedy, being greedy when others are fearful, these are all things which you have heard. But the most important thing is to be greedy when others are fearful. You need cash. Now this is very funny, because only when you are pessimistic would you be sitting on cash. If you are optimistic, you would be fully invested. But when you are fully invested and there is an opportunity available, there is nothing you can do, because you don't have enough cash. So at every point in time you should have some cash or some share which you think the best is over, right? I bought it at 150, it has reached 700. I am happy to sell. I think all the value juice in that has been taken. It can still become a growth share and grow after that. It's a completely different thing, right? So some of this cash or some keeping cash at a time waiting for an opportunity is not easy. I mean, what a Buffett does, what Apple does, what Bill Gates does in Microsoft, it is something credible, very, very creditable, because sitting on so much of cash which is earning nothing is not going to be very easy. At least now cash in the US is earning something, right? It is earning 2-3%, but earlier it was earning nothing. In fact, in Germany and Japan, you could have paid a penalty for sitting on cash. During such times, to sit on cash is not very easy. So doing something completely contrarian is not going to be easy, and you have to do it if you want to be in the market for a long run. understanding how you will behave and understanding how you will interpret the market and how what are your needs. I mean, I am now at the end of my life, in the sense that there is no big major cash flow which I need to provide for, right? It's all been done and dusted, right? So been there, done that. So now whatever I do, I can't change much in my life. I don't require too much cash, and my portfolio can always provide cash. In fact, I keep saying I don't need an emergency fund. If you bought a share at 10 rupees and taken enough bonuses that the cost of that share is 1 rupee, it does not matter whether you sell it at 1850 or 2540. Doesn't really matter. So after a particular time, when you have a long run in the market with equity and other debt instruments, long-term debt instruments, you really do not need any emergency fund. You can always withdraw from a equity fund or a debt fund, because you've entered. I mean, if I've entered a fund scheme in 1998 or 1999, how does it really matter when I sell it in 2023 whether the market is up or down? It really doesn't matter. I am happy to sell even my equity during bad times, saying okay, this it feels bad, but I still won't. How much will I sell? If I have 30,000 shares and I have to sell off 100 shares, does it really have to bother me? Because the emergency requirement can only be that much, because you always have a credit card. I have a credit card with enough limit. So I don't think an emergency fund matters if you have a portfolio and a credit card, but it's up to each person, right? Understanding that you have no control over the markets, and markets can do things which are completely different from what you think you should. Being prepared for those things, being prepared for Narendra Modi losing the 2024 election, right? Something like that. Every indicator says he is going to win. Every indicator, the favorable channels are saying he'll get 350 seats. The channels which are not favorable to him are saying he'll get 300 seats. So there's nobody questioning whether he will get 270 seats. He means BJP. So there is nothing to worry. Sure, but you never know how things can go wrong, right? Nobody thought that Vajpayee will lose in 2004. So if you have not been there in 2004, you don't even understand what this means. And I'm not saying that it is bad for the country if Modi goes or something like that. The country will go on, right? You may get fantastic opportunities, but for making use of those opportunities, will you have enough cash, right? So similarly, when things go completely different from what you thought, I used to be my history with PSU shares is in 1985, 84, 85, 86. I used to hate PSU stocks because I thought these companies were not well managed. Then I met one man who told me, no, don't get carried away saying MNCs are good and PSUs are bad. There will be a time when PSUs are good and MNCs are bad. These things will happen. These are cycles. You go by the PE and the EPS, and that EPS into PE is price. This formula doesn't change. So if the PE is if it is very pessimistically pricing, 75 rupees if you can get Indian Oil, at 150 rupees if you can get State Bank of India, at 72 rupees or 75 rupees if you can get NTPC, or at 1100 rupees if you can get Hindustan Aeronautics. These are not bad prices. These are very pessimistically looking at the businesses. So these were good prices to buy. But what price should you sell? That's a completely different thing. But yes, these kind of opportunities will arise. When these opportunities arise, do you have enough cash? Do you have enough guts to put it in? So PSU, what changed was when Mr. Modi came, he made some changes in PSUs, and if you see PSUs, even for that to take effect, it took time, and after that there has been a hockey stick kind of a thing. Same thing in banking. Because of the changes made in the banking and recovery of assets, all these banks were available at very, very attractive dividend yields, and then you bought them and then the prices doubled, tripled, whatever. So that happens. Then the results are good, results are bad, whatever. Then after that the prices take over. But at 70 rupees, having bought Bank of Baroda, at 200 it doesn't look too expensive because it's still available at a PE of 7. Yes, there could be bad results and take the price to 180, but will it come back to 70? Extremely doubtful, right? Another important thing which you learn with experiences you don't need to do any activity, right? Activity does not mean your portfolio is doing well. Buying, selling, activity actually costs money, and today it costs a lot of money because of your long-term capital gains also. Earlier we could at least buy and sell. You bought A and sold, you bought A to sell B, you sold B to sell, buy A, whatever you did not have to worry about capital gains. You just had to say, okay, this share looks good, let me sell this and buy that. Today there is a 10% exit load, right? So you have to pay a 10% tax, and 10% is very cheap considering that does not include indexation, right? So you be very careful about that. It is also another worry that the sales staff of mutual funds will be very beautifully sell to you products which may not suit you, right? So there is an NFO coming every day, and they are very good at communication. So are fund managers today. Very many usually fund managers who are good at managing money are pathetic at communication. But today many fund managers go through communication training, go through classes, decide how to speak, decide what words to use. There are companies which train fund managers communication. So whether it is a fund manager or there's a sales or somebody is talking you into making decisions which may or may not be right for you, be careful about what you're listening, what you're hearing, what you're listening, what you're understanding, and what you're interpreting. All this is important to become a good investor. Thank you.